Hey guys, what's up? It's Ace coming to you February 8th, 2022, 2:52 p.m. here in Cali, and I wanted to bring a quick market analysis video. I know it's been a little while since I've done one, and I was doing them pretty frequently, and I've decided to scale back a little bit because the market's just not really given a whole lot in terms of new data to be able to put forth that I think you guys can use as a roadmap for potentially where the markets may go. But I did want to come in and do this video today. Of course, we're looking at the E-mini S&P 500 futures. And today we had a little bit of an update. It was really nice. Dow closed 371.65 up, Nasdaq 175.79 up, and S&P 37.67 up. So looking at these numbers and hearing the talking heads on CNBC, you'd probably think, oh my gosh, this is the time to buy. This is the time to get in. Is it? I don't know. Let's take a look at what the technicals say, because I'm a technical trader and technicals never have led me wrong in 12 years of trading. So with that being said, guys, we have been literally bouncing inside, barely outside, back inside, and really in a super tight consolidated trading range within this 2-hour demand zone. So technically this demand zone was invalidated here because price did break below it and closed. The reason why I've kept this on my charts, and I'll show you on the daily, is because it's a really interesting chop area, okay? And so you see we came up here, we smacked our head on 2-hour supply, and then we came back down into this demand zone area. We did break it on this day and close below it, which invalidated it. And the reason why I didn't take it off my charts is because look at this price action the following 3 trading days afterwards. It's literally hugged this zone right in here. It hasn't gone below it, hasn't gone above it. It's literally just hung out right in the middle of it. So it's a very interesting level. That's why I've kept it on there. Technically, I should be changing this color. You know, I always try to do that to not confuse myself. So while we're on this video, let's just change the color of this in real time. We'll give it a nice little kind of purplish color here or something. So that way we know that technically this is really not a valid demand zone anymore. However, though, because price is chopping here, we're going to keep it on the chart. So what does this really mean? Well, let's take a look at a little bit of a longer view here. You know, we went ahead and we did come up out of this demand zone. We bounced here where I said I thought we would. We came up, smacked our head into this supply zone, and now we're chopping. To me, it's a nowhere market yet. We do have the VIX that's been rolling over. We'll take a look at that more in a moment. But if you look here, volume's been light, guys. We've had pretty light volume. This trading day here, we had some volume come in. I think that was just the bulls kicking this thing back up, to be honest with you. I think the bears sold it off earlier and the bulls kicked it back up, so we had a little bit of volume here. Last 2 trading days, today and yesterday, light volume, guys. Not a whole lot of conviction one way or the other. So really, to me, this is a wait and see environment right now. And if you look at Nasdaq has actually respected its intraday demand zone very well here. We had this intraday, I believe this is a 1 hour, right? Yeah, that's a 1 hour demand zone. So we had this intraday 1 hour demand zone, and hello, there we go. We had this intraday 1 hour demand zone, and that's been respected very well. You see it came up once again. This supply zone was respected. We had institutional sell orders here as an intraday supply zone. 2 hour came back down to this 1 hour demand zone, and it's held very well. You see wick here, you see a wick here. Every time price tried to come and break below this intraday demand zone, there's been institutional buy orders here that bought up that price action and pushed it back up, and really created this kind of a choppy price action that we see as on the S&P 500. So once again, to me, tech, same thing. It's a wait and see. Once again, volume has been lighter on the last 2 trading days. We're under the 20. We still got work to do. We are still technically in correction territory under the 10. So, you know, for me, this is kind of like a wait and see environment on both Nasdaq as well as the S&P 500. If we hop over into some of our other charts and just take a look here, I know I like to go through a lot of this stuff with you guys. I really want to focus on the VIX right now because we're still talking about the overall market. And once again, guys, as you know, in my previous videos, had this blow off candle, and then we did get a retracement of fear in the market, which is good. And then we got this bounce here a little bit. And once again, we had a little bit of chopping action. Now, what I like about today, guys, is we had a move down on the VIX today, which is great. VIX sold off another 6.21%, or down 1.42, and what that's telling me is fear is still subsiding in the market. Remember, this is the end game down here, guys. We want to get back down here to like the 16 level, 15 level, 14 level. We were living in that zone for quite a while the markets are doing nothing but going up. That's our goal, is to get there. But this gives me a really good sense of a feeling of potential bullish upside in the market because we're still seeing fear subside in the VIX. If the market was scared, if people felt that we would see more selling coming in the near future, VIX would be holding a more of a choppy pattern, or potentially if people were really going ahead and trying to hedge on the fear, we'd see the VIX starting to rise, and instead we're seeing it fall. So that gives me some conviction in the fact that even though we're chopping in the overall market, that there's a really good chance we could still see some upside coming. So real quick, just to review some of the other charts here before the video gets too long, we had gold. And as I've been saying, guys, if you go back and you watch my videos last week, I said gold is going to be doing some chop action, and that's exactly what it's doing. You might remember it broke out of the symmetrical triangle, which actually took off the chart. It broke to the upside, smacked its head here into the supply zone, and then came right back down into the demand zone, and now it's going right back up towards supply. So just as I said what would happen or might happen is actually coming to fruition, and we're seeing a chop between this supply zone and this demand zone on gold. What does that mean? Well, for you guys who like to sell premium, maybe a wide wing iron condor might be something for you to consider. And for those of you that are more just, directional players, a bounce between these two areas, I think is a very possibility for potential trade ideas and outlooks. We also do have kind of this little bit of a wedge pattern that's forming here, kind of a symmetrical wedging pattern. So we'll see what happens there. I think it'll have to break through this pattern, and it'll also have to break through one of these support and demand areas before we really see any, I think, hard push to the up or downside. Right now, once again, I think it's a premium seller's market when it comes to gold, just in terms of the price action and how it's looking. We do have some bullish momentum here coming up on this up move, which is natural, but it is taking place on light volume, so just be aware of that, guys, okay? Coming over here and taking a look at oil, and guys, just like I said was going to happen on oil is taking place. We rose up, we smacked our head into this supply zone. Now, if you remember in my older videos, we had supply down here that we broke through, which invalidated it. We removed it off the charts, and we're now in a new supply zone. And I had said back last week that I saw oil floating up to $90, $91 a barrel, and then I said we're going to get in the supply zone, we're going to find some institutional sell orders, and we're going to come back down. And that's exactly what's taking place here. We got into this supply zone, and then we've rolled over here. The TMO's rolling over, momentum's waning, and price did come outside of the supply zone. We have a little bit of bullish pressure here on this candle with the wick at the bottom, and we did see it sell off here, by the way, with some volume. So this is really good. Personally, I'd like to see oil pull back quite a bit. I'd like to see it pull back either to the 21 or the 50. And to be quite honest with you, I personally would look for it to pull back into one of these areas. And if I saw that the bulls were coming back in, I would probably hop into oil for an upside right at that point. But once again, we'll have to see what happens here. Keep in mind, guys, that's just my trade idea for myself. You always have to do your own due diligence, and be sure to talk to a financial advisor and get the opinion and the advice of a licensed financial professional if you are somebody who's newer to trading. Okay. That being said, we'll keep our eyes on oil, and we'll see how far out of this supply zone we do come down to. But overall, as much as I hate to say it, I'm bullish on oil just because of the price action. I hate saying that because, of course, the price at the pumps go up. But we'll see what happens here. Okay, keep your eyes on these areas, guys. Okay, as far as oil goes, this supply zone. Moving right along, take a quick look. Let's see. So bonds real quick have rolled over. No surprise there. I saw them rolling over last week. I said they did. We did this a bull gap trap, and then we came down and we did just a real shallow pullback up to the 21, and then we rolled again. And we're coming down here, guys, if I squish this, to a pretty decent demand zone area down here. I believe this is, I didn't mark it. I'm pretty sure this is daily demand. It's either daily or weekly demand. So this is going to be pretty significant. If we're going to see a bounce on bonds, it's probably going to take place right in this area, which is looking at like 137.80 down to like 135.52. So if you're a bonds trader or somebody likes to trade bonds, or you're invested in bonds, just keep your eyes on those levels. I think a potential bounce up is going to could possibly come there, and it also is going to depend on what the overall market's doing as well. Okay, we talked about the VIX. The dollar has been doing some choppy action here. No surprise there. Once again, dollar goes up, market goes down. dollar goes down, market goes up. They're inverse to each other, and since we're chopping in the market, we're chopping on the dollar. So, you know, dollar is just something to keep your eyes on, as it does run inverse to the overall market. And right now we're in some choppy action on the dollar. Not a whole lot to say here. Sideways action. I think the dollar's kind of going to be, I think it's going to be dependent on what the market does as to where the dollar goes in the near future, but we will definitely keep our fingers on that pulse. And then last but not least, everybody's favorite thing to talk about, crypto. Exactly what I said would happen happened. God, I feel like a broken record. Sorry, guys, but it is true. And if you go back and you watch my videos last week, I said, in order for me to get bullish on crypto, I'd have to see it break out of this trading channel. And I said I would not get long crypto until it did. It broke out here and I bought myself some crypto, just like I said I would. And I got in pre 40,000 and it's been up, up, up and away. Now, I did say we would have some work to do on crypto, getting through these moving averages. We're doing a pretty good job there, but we got a lot of upper head resistance. We have 3 separate daily supply zones that we're going to have to break through. 2, just to get back up to all-time highs on Bitcoin and crypto. So once again, for me personally, this was a great time for me and my risk tolerance to buy here and to get long crypto. For you, once again, you have to go ahead and do your own due diligence. Please, please, please do not trade based off of anything I'm saying in this video, and make sure you do get the advice of a licensed financial professional before executing any trades. But in terms of the technicals on crypto, I like what we're seeing so far, but we got a lot of work to do, guys. And as you can see right here, we already started to doji off the 100 at this point here. We had a pullback once it touched this moving average. So we still do have some work to do, but I'm nibbling on my crypto position and I will keep adding to it as I see the market continuing to move up, so I can build myself a nice position as we hopefully move back up to all-time highs on crypto. Okay, guys, that's the video. I'm going to keep it short and sweet. I hope you enjoyed it. I hope it helps you out with your trading journey. Please, 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 guys, please hit that like button. It's what gets, with the YouTube algorithms, my videos out to others so they can see it. And I want to help as many people as possible. Be sure to like my channel, or like the video, subscribe to my channel, as I have a lot more new content coming out soon. And be sure to hit that bell icon so you know when I'll be releasing my videos. Okay, guys, have a great day. I'll see you in the next segment. Take care.